Hello, Investing Putts, back with you for the weekly update. As the title would indicate, Weight Watchers helped me lose some weight from my wallet. So I got spanked by this otherwise innocuous stock. Um, Kind of a weird one to get spanked on. So the portfolio had a big drawdown this week, about 3%. The S&P was down until Friday, but it came back. So I'm still ahead of a virtual SPY portfolio, but the SPY is catching up, unfortunately. Here's a list of my current holdings. Some new additions. I got into AG, or First Majestic Silver, which replaces the SLV ETF, which has really low premiums right now. The big news is that I took a position in TLT, which is the long-dated US Treasury ETF. I'm not able to afford 100 shares of TLT at $137 a piece, so I'm in a poor man's covered call. I'm also doing the poor man's covered call on Intel, which I have been selling puts on. It's another fairly expensive stock, about $65 a share. So in both cases, I went long on the January 22nd, 2022 leaps. So those expire about 10 months in the future, and that gives me at least 4 or 5 months to sell covered calls against them before I need to roll the leaps out in time. So I got assigned on 3 stocks this week: Dish Networks, GDX, and Weight Watchers, and the only big loss was on Weight Watchers. So if you look at the nominal allocations in my portfolio, ignoring cash, I'm pretty diversified. I'm not into any so-called technology other than Intel. The typical stock market hedges, which are bonds, precious metals, and oil and gas, are about 50% of my portfolio. You can't see the allocation for banks on here. It's 7.9%. So your longer dated treasuries typically have like a 0.5 correlation with the SPY. Precious metals are fairly uncorrelated with the SPY, and oil and gas stocks are typically like a 0.6 correlation with the SPY. So if I really wanted to minimize correlation, I would have more in cash and more in like short dated bonds, the really uncorrelated with the stocks, which I think are overvalued right now. So Weight Watchers was down about 8% on Friday alone, which qualified it for the bear of the day at Yahoo Finance. I really can't find any obvious news that drove that huge move down. Certainly, I wasn't getting premiums commensurate with a stock that drops 8% in one day. But I'm okay holding Weight Watchers. I think it's got earnings, and I think the story is still solid. It could just be profit taking. The stock has been up a lot in the last 12 months, though less so than the index. Weight Watchers is definitely a smallish mid cap stock, since its market cap is only about $2 billion. It could just be a casualty of the profit taking on small caps, which have been outperforming anything else in 2021. So US Steel, or X, has done very well in the last 3 months. I'm up 8.5% selling bull put spreads just in the last 6 weeks, which is a pretty significant appreciation. But this is a risky company, and it's unprofitable, so it kind of goes against, do I want to own US Steel? Not really. The stock is up 250% since February of 2020, since before COVID, which to me doesn't make any sense. Is the long-term demand for steel up 250% since before we knew about COVID? I don't think so. So I'm looking for another industrial stock to replace it. Do you have any thoughts? What are some of your favorites that are in the fairly low cost variety. So a couple that I've been looking at that are from my stocks option screener are Alcoa or AA and Mosaic Chemical or MOS. But we'll see. I'll make a move this week, but I'm not in any rush. I wouldn't mind sitting on some little more cash going forward. So anyway, that's all I have for this week, and yeah, I would love to hear your feedback. I think there's 8 subscribers at this point, so this puppy's about to go viral. Anyway, would love to hear your thoughts or criticisms in the comments, and I'll see you next week.